morning, everybody. Happy Wednesday. Welcome to the morning show. This is Stock Market TV. Spencer, Steve, JC, Alfonso with you as always. Let's see, what are we talking about today? Well, start of the year hasn't been great. It's been a day and a couple hours. So as JC says, let them dance, but you got to be at least a little interested, right, in the price action yesterday. I know I am. We'll talk about that. Maybe if we're lucky, JC will share a chart or two from his conference call last night. If we're lucky, Brian Lund is the guest today. He'll be on at 9, talking about whatever's on his mind. And in the meantime, if you're watching us on YouTube or on Twitter, do me a quick solid. Give us a like, give us a retweet, do all that good stuff. Thank you very much. Let's go.
Oh, yeah. Second day of the year. That means what? We got like 250 more days, trading days left this year. Is that about right?
Like that.
All right. Moving right along. It'll be baseball season before you know it. You see, that's for Knicks fans, that's the best day of the year is when pitchers and catchers report. Right? Is that right?
Maybe.
Is that a low blow? Too soon? Too soon. Great conference call last night. That was good. Nice interaction. Big showing. I feel like more and more people are showing up to the live call. It'd be cool if we could like track it so we can maybe gauge sentiment over time. How many show up to the live call versus watching the replay? We had some record numbers yesterday, I think. What does that mean? Does that mean anything?
Sign of a top? I don't know.
Top in what? Also, maybe it's a new year. You know, it's kind of like people start going to the gym. You know, start going to the conference call, start showing up live, put in the extra effort rather than watching the archive later.
Yep.
You know, is it something like that? So we'll revert
maybe
back to traditional standards next month, and the gyms will be empty once again. All the same. Is that what it is?
Maybe.
Good conference call. We went about 70 minutes, but not a lot of charts this time. We only had 127. That's light.
I would just say, I had no idea, JC, you felt so strongly about the recent price action in the Dow. You said that was like one of your favorite moves ever. I didn't realize that the last 2 weeks made you feel such passion.
He favors the Dow. The Dow's like
no.
He's talking about he's talking about the last 2 weeks.
No. He's talking about the last 2 months. The Dow is the most important stock market index in the world, but that's not what I was talking about. I was talking about the whipsaw.
Oh,
you had a fresh break in October. My third book is going to be about whipsaws.
Okay,
I got to get the first one out first.
You said my third book.
My third book is going to be about whipsaws, and there may or may not be a white paper prior to that. We'll see. I have kids. It doesn't. You know, the fact that Thrasher won the Dow Award this year with a kid, extra points.
Talk about why you like that setup so much.
Because what happens is, and this goes back a zillion years, and you could go back and study this. I mean, it's just such a classic bottom. You see it in long-term time horizons. You see it in short-term time horizons. You got the fresh low. In fact, why don't we show it? We've got it. You guys want to show it?
Yeah.
It's pretty sexy. I must say, even Spencer caught wind of my excitement.
Yeah.
Right?
Oh, but I thought you were referring to just the recent move. You were saying the move in general.
The shake and go. The shake and go.
Little shake and bake, right?
Russell 2000, similar.
All right, go throw up the new slide 2. Not that one. We'll get there. New slide 2. Yeah. Spencer, increase your volume. We can't hear you. I don't know if that's by design. So here's the Dow Jones Industrial Average, new all-time highs, most important stock market index in the world, new highs. But how did we get here? Give it to him, Spencer. Give it to him. 5,000 points. From failed moves come fast moves in the opposite direction, right? So you got that low. You get the lower low in late October. By the time the Dow made those new lows, S&Ps and NASDAQ did also, by the way. When they made those new lows, there were almost no stocks still going down. Most stocks had already bottomed in early October. So you have a lower low in the indexes. You have a lot fewer stocks making new lows, and momentum's diverging positively. As soon as the Dow or whatever index or whatever stock we're referring to gets back above the prior lows, there's the trade. And what do you know? 5,000 points for the Dow in 2 months.
Russell 2000, same thing, no?
Yes. Yeah. A lot of them. A lot of individual industry groups also. Some stocks themselves for sure. This is just one example. Nice and clean. From failed moves come fast moves in the opposite direction. That's it. Shout out Brian Shannon, right? Alpha Trends. This stems from him. You know, Brian was a huge inspiration to me early in my career. This goes back to 2005. So that was what, 18, 19 years ago. Brian Shannon taught me this, right? So I've been monitoring this type of setup for a long time, and it just, it just warms my heart when I see it play out like that, Strazza. That's why my third book is going to be about whipsaws.
Okay.
Coming to a bookstore near you.
What stood out? What stood out in the price action yesterday, guys? I know you want to overthink it, Spencer. Did you notice anything?
Small caps outperforming.
That's one.
I was going to say anything with growth getting punished.
Any of the cap weighted indexes underperformed? Yeah.
Dollar rallying, consumer staples outperforming.
What about the biggest stocks?
Didn't have a great day.
Why don't we do a little state of the markets and discuss, shall we?
All right. I even brought a chart today.
All right, so I got 4 charts with me here today. These are 4 charts that I've shared quite a bit over the last 6 months or so. They're 4 charts. These are 4 of the most important groups in the market. We're looking at industrials that historically have the highest correlation with the S&P 500 of all the S&P sectors. So kind of a big deal. When we ran into those former 2021 highs back in July, that was reasons to be cautious, reasons for a correction. Not just were we heading into, a classic period for market corrections, that August, September, October period, but the most important groups was running into those former highs. So as long as we were below the 21 highs, it was hard to be too optimistic on equities until October, of course, when we got more data. Now we're breaking out above those highs. So the same reasons why we were more bearish, more defensive at the end of July, I think is reason to be bullish now, right? If industrials were to fail here and break back below that 108 level, break back below those 21 highs, the same reasons that got us cautious in July, I would argue, are valid once again to be cautious here moving forward. Go to the next one.
It's not enough to make you cautious, just that now we have new indexes that look the way that these did in July and are running into the same overhead supply zones from last cycle. S&P,
I'm a more of a breadth guy. I'm more of a market of stocks guy. These have been great leading indicators, so I'm going to continue to kind of lean on them. How about semiconductors? No arguments from any. You can't argue with this, right? Industrials, highest correlation of all the sectors with S&Ps. Semiconductors, you're going to argue that this is not an important group. Again, got back to those levels in July, took a nice little pause. Now we're back above those levels. If semis are above 160, hard to be too bearish, right? Hard to be too bearish. If we break below those levels, it invalidates that breakout. We can have that conversation then. Next. Homies, you're going to argue that these are not one of the most important groups, right? Got back to those former levels in late 21, failed there in July, just like industrials, just like semis, corrected for a few months. Now we're making new all-time highs. If we're above those 21 highs, hard to be too pessimistic. This is one of the most important groups in consumer discretionary, which of course has been a leader of this bull market. And then last but not least, the granddaddy of them all, Technology represents almost a third of the S&P 500, dominated by the two biggest companies on earth, Microsoft and Apple. Got back to those late 21 highs, failed in July. Part of the reason we were cautious, again, with semis, industrials, and homies. Now we're breaking out above that. So, if we're above these levels, if we're above the 21 highs in the most important groups, it's hard to be too pessimistic, right? Makes me want to lean more into buying dips than selling rips. We can cross that bridge when we get to it, if in fact we start breaking below those lows. We haven't. So let them dance. We'll see what happens. But I think that these are four big ones, Strazza. Am I missing any? Would you add a fifth?
No, I wouldn't change it now because this list I think has served you well all year. Or back.
What would you add? What would you add? That's this clean.
Nothing. Maybe small cap industrials, but you already got XLI in there.
Yeah.
Nothing really comes to mind.
These are solid, right?
Yeah. I mean, these are four of arguably the most important indexes in the world, right? These pretty much all get thrown on the most important lists. So it's, yeah. Also, though, I think you could look at S&P, NASDAQ, and now even Dow, right? You'll see a failed breakout start printing in Dow Industrials too. I think you could use those as well.
You want to just rip through some countries quick?
Yeah,
before Brian Lund gets in.
And then I have one theme I want to talk about. I'm just preparing a second chart. But these global indexes, I mean, this stands out as much as anything right now. The strength outside of the US, so bullish.
All right, Spencer, are you ready? I need you quick on the trigger. Can you handle it?
What do we got?
All right. Let's start with the new slide 11, and we're just going to run down. We're just going to hit them. All right, so here we are. We're looking at the global Dow. If you want to zoom out so people can see it better, so they don't need to see us. There you go. So here's the first you have the global Dow. And you're looking at almost 20% financials. Second largest component is industrials. Technology is the third largest component. So it's pretty diversified with respects to composition. Global Dow making new all-time highs. Next, here's the Global 100 index fund making new all-time highs. Look at the Euro Stoxx 50. Next.
Love this.
This is the broadest measure of European equities. This is like the S&P 1500, but for Europe making new 52-week highs. Here's the Euro Stoxx 50. Euro Stoxx 50 is kind of like the Dow for Europe, making new multi-decade highs, new 20-year highs for the Euro Stoxx 50. Germany making new all-time highs. France making new all-time highs. Are you keeping up, Spencer? All right, I see you, dog. I see you. France, new all-time highs coming out of a multi-decade base. Denmark, look at that Copenhagen index continuing to drive high.
Oh,
we lost him?
We went so fast, we lost JC. There we got him. All right, Denmark. Anyway, continue.
Are we back?
Yes.
We're good? Okay, sorry about that. Doesn't notice how Denmark doesn't look like any of those other European indexes. Looks a lot stronger, right? How about the Oslo All-Share Index, right? Look at Norway. Man, Norway's got the best meatballs. Dude, people talk about the Swedish meatballs. Dude, Norwegian meatballs, bro. And that lingonberry that they got there, woo! Instead of, you know how the gringos do the cranberry sauce? Norway, they do the lingonberry sauce. Woo! Delicious. With some mashed potatoes and the meatballs. Oh my God, so good. Anyway, Norway, new all-time high. Sweden, look at the Stockholm 30 index making new 52-week highs. What about the Milano Indice di Borsa? Italy, not exactly known for their equities market, maybe more of a food and wine and destination, of course. Stock market making new 15-year highs. How about the London FTSE 100? Setting up nicely, pushing up against all-time highs. Look at the London 350, which broadens it out. Look exactly the same. How about Poland? New all-time highs. Look at Amsterdam coming out of a 20-year base. Looks great there in the Netherlands. Look at Hungary, new all-time highs. How about Athens? We talk about Greeks. We talk about Italians. Great food, great wine, great culture. Not known for their stock market. You can make the same argument for Greece, pushing up against your new 15-year highs. India, new all-time highs for the Nifty 50 index. If you want to broaden it out, look at the Nifty 500. new all-time highs. Look at Bank Nifty. Looking at the financials there in India, making new all-time highs. How about the fact that people tell me that small cap stocks aren't working, JC? Small caps aren't working. All right, bro. Have you even taken the time to look? Notice how historically when Indian small caps are outperforming Indian large caps, that's usually good for stocks. That's exactly what we see in here. Japan pushing up against new 33-year highs. Australia, new all-time highs coming out of a 15-year base. Finally able to break out above those great financial crisis highs. What about Taiwan? New 52-week highs, kind of a big deal. What about Indonesia making new all-time highs? China's not. China's not. China pushing down against new multi-year lows. Hong Kong sucks also, right? And you could really see it in slide 38 when you look at the, all of the best performers last year. You got Poland, Greece, Mexico, Ireland, Spain, Italy, Brazil. The United States was the 8th best performer, believe it or not. And you look down at the bottom, you got Hong Kong and China down low. Let's finish up with a little Latin America. Brazil, the Bovespa making new all-time highs. The Bolsa de Valores in Lima. This is Peru breaking out of a 15-year base to new all-time highs. What about Chile? Again, not exactly known for the equities market. Give me the food and the wine and the culture all day. Like Greece and Italy, probably not evidence of risk aversion if this is making new all-time highs. What about Argentina? This is the ETF, so that we're not getting any crazy currency moves here. Argentina, new all-time highs. What about Mexico? New all-time highs. And that, my friends, is a quick rundown as to what's happening around the world. I got people telling me we're in a bear market. Are these countries and what they're doing confirming that we're in a bear market, or does it suggest something different?
Uber bullish. Seeing participation really broaden or expand internationally.
I thought you were done like 3 different times. And then you kept on going.
Is he done now?
I can keep going.
I want to talk about tech stocks quick before.
How many more countries could you name?
I mean, we didn't even talk about Israel. We didn't talk about New Zealand. We didn't talk about Uruguay. We didn't talk about. I mean, you really want to keep going?
There are other countries.
What?
I believe you.
There are other countries. We didn't talk about Portugal. We didn't talk about Ireland. Ireland, the all shares index in Ireland looks great.
JC, are you still in Chewy?
I am. Remember, we bought the January 21 puts as a hedge for some short-term volatility. Yeah, go look at the post. It's all detailed there, Billy.
Of course, the obvious question then is the U.S. has outperformed for so long. Yeah. Is this the beginning of maybe a regime shift?
I think so, and I'm going to tell you why. Throw up my charts, Fonz. Great segue, Spencer. Just great. This is why. So I think we're going to see a regime change here in terms of large cap tech, no longer being by far the best group to hang out in for bulls. I think as breadth continues to expand, the rally continues to broaden. Other groups are going to do far better than large cap tech this year. We just had first day of the year. We talk about how important the flows are in this first week of the year. JC does a really good job of coming on here and explaining that institutions are positioning this first week of the year for the rest of the year. I don't think it's a coincidence at all that XLK, so large cap tech, had its worst day on a relative basis in about 3 years. To go back to January of 2021. Now, say, oh, it's just because of Apple. Apple had a bad day, right? I was hoping one of you would say it.
Oh, no. Apple did have a bad day.
Equal weight, also worst day since, I think, November of 2020. Worst day on a relative basis. This is now equal weight tech versus equal weight S&P. So you're seeing it there also. This kind of short-term volatility, and you'll see it spike in both directions, tends to happen at turning points in the trend. I think these trends are turning in favor of stocks that are not large cap tech stocks. Yeah? No? What do you guys think?
International certainly falls in that bucket.
Well, okay, so yeah.
A lot of things fall into that bucket, though.
So any ratio that's driven by the cap weighted impacts, right? In something like XLK, which VEU SPY is when we do ex-US versus US, the US index that we use there is very cap weighted in the S&P 500. I think with large cap tech losing leadership this year, you can finally see some of these international stock ratios, right, start to move higher. In other words, international stocks start outperforming the US simply because it's too hard to outperform the US in a year like last year. When the biggest stocks that have such heavy weightings are doing so well, it's almost mathematically impossible to outperform the US. That's what we continue to see in this decade plus long trend of US outperformance. I think as that changes, start to see international stocks take a leadership role.
So if large cap tech is going to, lag a little bit, it will certainly be a whole lot easier for other countries to
Yeah.
outperform. It's not a given, certainly not a given, but will certainly be easier
Right.
for everyone else to sort of outperform the US.
I mean, so 99% of the time when we talk about, US versus international outperformance, we're using the S&P as the benchmark.
Right.
Think about the heaviest weightings in the S&P. If mega cap growth cools off and loses leadership, then all of a sudden the US can be beat.
Can and will, two very different things.
I think it happens this year. I really do. It'll be interesting to see what these international ratio charts look like at the end of the year, because they have been falling like in a straight line lower for an extended period of time, more than a decade.
They've been falling. They've been falling for an extended period relative to the market for as long as technology has been outperforming.
Right. So I think those two things change together. How long of like a base building process these trends require, we'll have to say.
Well, periods of underperformance in tech have happened. They've just been pretty short lived. A
not over
here, a quarter there, right?
Nothing in sustained time frame.
Right.
Yeah.
So that's
should be a fun year. And what this means for people like us, I like to look at lots of charts, more options. JC hates it when I say this, but the market was very thin last year, right? Like there are a couple good places to hang out and you kind of stuck to them. I think this year we're going to have options all over the place. There's going to be opportunities in value stocks. There's going to be opportunities in speculative growth stocks. There's going to be opportunities in small and mid cap stocks. Already seeing them. A lot going on. Opportunities overseas.
That would be a stock picker's market because the indexes would theoretically lag behind.
That's it. That's where my head's at. We'll say.
All right. I don't know, man.
Bitcoin big failed breakout. Patrick wanted me to tell everybody.
Bitcoin failed breakout? Yeah, I wake up the last 2 days and it's down like 7%.
Big stick. This is a big stick here in Bitcoin. You know what? The stock market told you yesterday. Look at the price action in Coinbase, Mara, the other Bitcoin miners yesterday. They were like, no way are we buying these new highs, the crypto stocks. So,
I mean, frankly, it's not just crypto. It's like I said, it's anything growth, anything tech.
Look at these candles, the way that the Bitcoin miners reversed yesterday.
Dude,
nasty.
I had remembered, this is pretty stupid of me, but I remembered that I bought Mara in my trading account. This is like I don't know, 2 weeks ago.
Oh boy. Yeah.
And I remembered about it over the weekend. I was like, oh yeah, Mara's there.
Yeah. Wait, what? Did you sell it?
Nope.
Okay.
Yeah.
Listen, the trends in all of these, Coinbase, Mara, any of these, most of these Bitcoin miners, the trends are now up, right? The reversals are completed, but that doesn't mean we can't have a similar corrective phase like we had July through October of last year. And go look at those charts and do the little math and calculate the drawdown. In the case of the miners, they were down like 60-something% as they were completing a reversal pattern, which they went on to complete soon after. Right. So you have to just know what you own when you're in these guys, because it's going to be a wild ride. Depending on your time frame, Spencer, I don't know if you want to take these things back to the old cycle highs, but you just have to be patient and confident that you can wear through those drawdowns. Right.
Yeah. I mean, again, knowing what you own and knowing where you own it, right? I can handle a little more volatility in my trading account because it's a very small account and I do dumb things there, and it's not real money for me.
Do you YOLO the options?
I do a little bit of YOLOing, just a little bit. Anyway, good question from Caesar. What do you think of potential rotation? We talked about this a little bit yesterday, right? With the value, um, uh, defensive sectors, utilities, real estate, financials, uh, healthcare. We had this debate yesterday. Outperforming. Yeah, I mean that was kind of a big topic of yesterday's show.
I think rotation is an easy word. I think sometimes we get a little lazy and overuse it. It's really been an expansion more than a rotation. Like we say rotation a lot because that's, I think, what most people know, but it's really just an expansion. We went from a situation where maybe a quarter of the stocks were working really well to a situation where 3/4 of stocks are working really well. Now, it's not like it was zero sum out of one into the other. It's more just join the party, I think, over the past few months at least. And I also want to stay away from these are fine, but the growth versus value stuff I think is going to be dangerous this year. And you don't have to pick a side. Growth versus value. It doesn't.
You've been saying that.
Yeah. What?
You've been saying that.
I think that's important. I still believe that. So we'll see again. But I think it's just again out of the biggest winners, out of the mega cap tech, mega cap growth trade, and into other growth and also value. And to sit here and act like value didn't work last year, I also think is crazy. JC just talked about this large cap industrials chart, really the first one back to new all-time highs. Value worked great, some of it. So.
Yeah, and you could see that rotation started a couple of months ago, right? With large caps underperforming small caps over the last couple of months.
Totally.
The cap weighted S&P 500 underperforming the equally weighted S&P 500, also technology underperforming industrials and other areas as well. We've been seeing that rotation for sure, most definitely. The stock market last year, again, when you talk about it was thin, I think it's hard to have a conversation about market breadth without talking about sector rotation. You can't disagree that at every single point where the markets needed to rotate, you got it.
Yes.
Right? At the beginning of the year, last year, everything was working in the back half of 22. Everything, right? People were like, oh, 2022 was a bad year. Yeah, maybe the first half of the year, but the second half of the year was great. It was just the mega cap growth and tech that wasn't working. So they really needed to see that rotation coming into the new year. And sure enough, they got it. So then technology and growth was dominating so much in the first 6 months, it was leaving everything else behind. Like, all right, you need to see rotation into industrials and some of these other areas. What happened? You got it. And everything was working except for small caps, particularly at the index level. Are we going to get rotation into those biotechs, the bank stocks, the Russell 2000, the value line index? It's now or never. What happened? Money rotated into those areas. So with every single time where it's like it's now or never, it's been now. So that's part of that breadth conversation, and that was consistent all year last year.
But it's also important. I think rotation, the word rotation implies that something stopped working so that something else could start working. Really, at least off the October lows, I think expansion is the better word, right? Like
you're right.
More stuff started working. We needed it. You're absolutely right. In dire need of a broadening of the rally, and it really did in a big way.
You're right. Yes.
These new highs peaked right around December 13th, December 14th. That was the last worst day. I'm just looking at Magnificent Seven versus broader market ratios. That a really bad day as new highs were peaking in mid-December. So that's interesting. Big day of underperformance on a really positive day for the broader market. Now a big day of underperformance, and yesterday what was an ugly day for the broader market. Profit taking.
Why don't we do a quick little rundown here? Dow futures down once again here, day 2 of the year, down 130 points. S&P futures down 20 handles, about 40 basis points. NASDAQ 100 underperforming once again, down 0.5%, almost 100 points on the NASDAQ futures. Bonds down as well as stocks and bonds continue to trade together. Bonds not seeing a sympathy bid with the selling in equities. Gold down 1%, silver down almost 3%, copper down 1%, oil flat, and the dollar up once again with volatility pushing 14 and interest rates inching higher. And then, of course, the old funny money getting hit hard today. You got Bitcoin down 2,500 points, down to 42,500. that breakout failing. Ethereum down 6% today, down towards 2,200. Solana, you got a quote on the Solana?
Mm-hmm.
Solana down 8.5%, back under 100.
Wow.
Interesting failed breakouts in cryptocurrencies to start the year. They're knocking them down. Is that telling for the overall market? Yesterday, we were sitting here talking about how cryptocurrencies were doing well despite the selling in technology and in these growth stocks. Looks to me like maybe the stocks themselves had it right.
Stocks were right. I said this yesterday.
Stocks were right
on Spaces.
Yeah, you should say that.
Even the crypto specific equities yesterday, JC, as Bitcoin and Ethereum are making new highs. See Coinbase down like 8%. That doesn't smell right. So yeah, the writing was on the wall. Again, I know probably sound like a broken record, but these uptrends in crypto, they don't move in a straight line at all, and the corrections can be quite severe, like we were just talking about with Mara and these Bitcoin miners from this summer. So hold on tight.
I mean, listen, I don't have a horse in the race. That 30 was our target in the Mara. That was hit. It's probably not a coincidence that it immediately reversed from those levels. I like that. I like that trade. I like that trade if we're above 30, but we're at 20. So, I mean, we're nowhere near that. So I got to reevaluate that.
Went from like 7 or 8 to like 30?
30, yeah.
In 2 months?
Less, maybe.
Come on. What do you want?
I'm good. I don't want any. I mean, it did what it needed to do. I mean, the target was 30 all along. We got there. So now, we just sit tight. Right?
Hold on, though. We gave secondary targets, and for good reason. The way that this thing resolved this base around
secondary targets.
We gave plenty of secondary targets.
Like in the 50s?
All the way back at the old highs.
200.
Fine, but you got to be above 30 for that trade to be valid, and it's not. So
fine, you can buy weakness back towards 20. For me,
yeah, that's right. Which is why I said I'm going to reevaluate, because you're right. I was thinking the same thing. Yes.
If the reversal's valid, I still like the secondary targets. Again, I was just saying to Spencer, what's your time frame? You have to be patient. If you want those old highs, you really got to be patient, and you're going to wear through some nasty drawdowns. So
that's right.
There's more than one way to do it.
Yep.
Where's Brian?
Brian's here. He's waiting for us to stop blabbering.
Ooh, BC Lund in the house.
Right back.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian Lund.
Oh,
in the house.
As you can see, I've gone into the witness protection program.
What's up, you sexy bastard?
I'm in North Texas right now.
What, they let you in there?
I know, right? Crazy.
What's going on in North Texas, of all places?
I'm here with my daughter, looking at some colleges and things.
Oh,
what's in North Texas?
Dallas is. I mean, we're Dallas-Fort Worth. We're like McKinney. Suburb of Dallas. So, where's Steve?
Steve is getting a coffee, I guess.
So everybody admits they need glasses except you, JC. Is that how it works now? I see everyone's got glasses.
I'm good, man. Like, my vision is pretty awesome. My wife tells me my hearing's shot because she mumbles as she walks away, so I can't hear her. Yeah, so she's like, she
that's
thinks
what you tell her, right?
Thinks I need to go see a doctor because of my hearing, and it's like, well, maybe if you wouldn't mumble walking away from me, I can understand what you're saying.
Yeah,
she doesn't like it when I say
it's called grumbling under your breath. That's what they call it.
Like, sorry, I can't hear you. So BC Lund, a veteran of the markets, longtime friend of ours, and big year for the stock market, 2023. And here we are, seasonally strong time of the year. And, granted, it's only been a day, but we're not seeing that early year strength that we've that we've seen so much over the last 100 years. Time to overthink this, or is there something to the fact that they're not coming in hot, buying everything, and that's a tell for the future? What are you thinking here?
Well, I think we don't see the early year strength because we saw such end of year strength. I mean, we saw it last year. But I want to ask this question first. First, I'm assuming you drank something really nice on New Year's Eve, right?
Oh yeah.
What'd you drink?
I drank Barolo and Amarone.
Okay. So I don't know what that means, but I was thinking back on New Year's Eve.
It's only like Italy's best wine. Like throw in Brunello, and now you got
Okay.
the trifecta in there. I didn't drink any Brunello, but I went with Barolo. You should drink some of that, actually.
Good to know. Good to know. I want to try your wine. That's the one I want to try.
Almost ready. We're bottling our 21s now next month.
So you say. So looking back on the year on New Year's Eve, I sat and I ruminated, I whittled, I thought back on the year, but I really thought back on 2 years because this is really, it's a 2-year segment that I think is important. And what's so important about it is, we're back to all-time highs. And so there's this temptation to say no harm, no foul, right? We're back to all-time highs. But in that 2-year, in those 24 months, there's a lot of destruction, right? A lot of destruction. A lot of people blew up. A lot of people I know blew up in 2022 because they couldn't get their head around the fact that the market was in a downtrend. But even more people blew up in 2023 because they kept shorting this relentless bull market. And so when we do these, interviews, like I'm trying to think of who is listening to us right now. And it's not, it may be some guy that's sitting on some institutional desk, but it's probably a retail trader like most of us, someone that doesn't have access to special tools or a team of analysts. The only advantage we have is risk management and our mindset. And I think it's really important to look back on these last 2 years, especially if you didn't do as well as you thought you should have, and kind of put yourself in those spots during the years and say, what was I thinking here and what was wrong? And I sent Spencer a chart. I don't know if he can pull it up, but it's a chart of Meta. And if you look at Meta on November 3rd of 2022, right, when it hit $88, everybody in the world said big tech is dead, right? Zuckerberg blew it on the metaverse, right? He blew his shot. And goddamn, if Steve and I weren't on Spaces for the following months saying, you're blowing it because we got this, we got this jump, we got this basing, and we started to be more constructive. And so I just think it's really important when you think back, first of this year, think back on what you've done the last 2 years and try to put yourself in those mindsets that didn't work, and then be open to a lot of different opportunities this year, but driven by price.
Meta's first half of 2023, just for anybody playing along at home, just go look at the chart. Brian's talking about November.
That was the best trade I ever put on in my life. Until that point, I think I may have had a better one later on in the year, but at that point, that was the best trade I ever put on in my life.
Yeah. But remember what people were thinking, right? People were literally saying big tech is dead. And we were making the case on these Spaces that if anything's going to work in an inflationary environment, it's going to be big tech, right? And no, you couldn't believe how bearish these Spaces were. And a lot of people not only missed the boat. Look, if you missed the boat, okay. But if you tried to short the boat, the rocket ship, that's the sad thing. There's people that lost 5, 6, even 7-figure accounts at the end of this last year because they could not get the mindset around that the market was going higher and that they had to get out of the way and stop shorting. I don't know what it is in the human condition that wants to jump in and short something as soon as it goes up.
I don't have that.
How about the things that kept people from buying and kept people shorting? Things that don't matter, like M2, right?
Chinese balloons.
I don't really know what an M2 is, but they were very upset about it.
It's money supply, I think, right? There's an M1 and an M2, right? Isn't that?
I have no idea.
There's like 6 M's. There's so many M's.
I've always wanted an M3, but I don't think
M16's a gun. I know that. So
then of course you got the yield curve, classic example.
And that will invert sometimes. I hear the yield curve will.
I don't know. It's wild. And then you got the Biden. Right, the Biden's ruining everything. Right, it's administration. It's all their fault, and then you can't buy stocks with the Biden.
You're missing. Of course, yeah. Go ahead. Sorry, I keep trying. Yeah,
that's a fill in the blank. Any politician, you can just put so and so is ruining.
That's right. That's right.
Keep going. Finish your list.
We could do this all night. Of course, housing, and the consumer. The consumer can't afford anything, and then of course Europe is a disaster. Crazy recession over there. I just ripped through all these European markets, and all these European indexes are making new all-time highs. Some recession. We should have recessions more often. 2 really big ones. You're leaving out 2 wars going on. Yeah, but wars are historically good for stocks. Fine, but people don't know that.
The average person doesn't know that. Yeah.
that
but that's-
CNBC doesn't put out an article being like another war broke out. It's so bullish. It's not that. Trust me, it's the opposite. And then the banking crisis. That was a big one. March and then again in May.
3 banks nobody has ever heard of disappeared.
That was a big
Yeah.
deal. All that did was it was an illustration of how much work the Fed had done and how much it was really working. That was
And don't forget all the people that have kept hoping and hoping for a resurgence in COVID, right? Every time someone sneezes, here we go, we're going back to COVID. Like there is such a doom and gloom in the world these days, and it's so antithetical to successful trading. You just have to. I heard something this weekend. It says you don't have to have an opinion on everything, right? And that's a philosophy that I have to take to heart.
I looked at the Moderna chart yesterday, Brian, and I thought, oh shit, there must be a new COVID.
Yeah,
There's a lot of new COVIDs. I think I just had it a few weeks ago.
There's this tendency for people when you get these big moves, like when Bitcoin dumped today. First thing I want to do is what's the news, right? And what it is, it's a rationalization for not following whatever their methodology is, or it's an admission they don't have a methodology. Because what will happen is they'll go and they'll figure out what the news is, and then they'll immediately start rationalizing why, oh, this is just an aberration. They'll certainly rationalize it in their favor, right? And that's again why you just go back to like what Brian Shannon, the GOAT, has always said: is only price pays, and that's what you got to pay attention to.
That's 2 Brian Shannon quotes already. It's only 9:15.
Did you guys quote him earlier?
Yeah, we were talking about from failed moves come fast moves.
Oh, I thought that was yours.
Nah, I got that from Brian.
What are your quotes? We need like the top 10 JC quotes. You've got to have some good ones, I'm sure.
Let them dance.
Let him dance.
What's that?
Let them dance.
Let them dance.
Strazza likes to overthink the early market futures, so I'm always telling him to let him dance.
Mm-hmm.
Let him dance. Let him dance.
I heard someone say this one over the weekend: not my circus, not my monkeys. Like, you don't have to worry about that. That's not my thing. Like, it's somebody else's thing.
Yeah, that's a good one. A lot of people like to create new problems and get other people's problems. Most of these things are not my problem, right? The average retail investor is sitting in too much cash. That's not my problem. That's their problem. Right? Like I have enough. I have 3 kids. I got enough shit going on. I don't need to take on other people's problems.
Yeah, and I think there's going back to Brian Shannon, there's already a rush in of bulls from 2023 that are already trying to rush in and buy stocks yesterday, which I think is too there's this obsession among people I know of Palantir, right? That people they want this stock to win. And I keep telling people, like, just wait till it shows some strength. And Brian put out a great tweet that just said, be patient. Like, you got to see some strength after a drop before you start getting involved. He uses the 5 EMA, like if it's below the 5, declining 5 EMA. I use the 8, but like there's so many objective.
I think he uses an SMA.
Does he? He may use the SMA. Yeah. There's so many objective tools out there that you can use to help you stay out of harm's way.
What are we buying, Brian? Enough of this nonsense. Let's give the people what they want. What are we
I don't
buying?
know what we're buying, but here's what I'm going to throw out there. So again, this is the theme going back to, like, let's keep our mind open to what could happen, right? So there's a couple of names. These are wacky AI and metaverse names that people gave me in 2022. They're like, these are going to work, and I'm not so sure they are, but I'm keeping my mind open, and their charts don't look totally that bad. So I'm going to throw out some really crazy names. So I'm going to throw out Path, PATH.
Yeah, that's not that crazy. What's crazy about that?
DT, right? EQIX and WDAY. I don't know what these companies do.
Equinix is pretty solid right there.
Yeah, I don't know what these companies do, but I know they're metaverse AI related. So those are ones I'm going to keep an eye on, and I'm just going to try to be open-minded this year, except for with crypto.
Well, that Equinix is a REIT.
Yeah.
Is it a data center REIT or something?
Data center.
Got it.
Data center.
Thing's a beast.
Yep.
And I think also the other thing I'm going to look for is Steve and I. Well, we talked about this last year about those potential stage 2 stocks, right? And I think I was a little early, right? I think we got a little ahead of ourselves. Some of them are still in that stage 1, but that's what I'm going to be looking for probably after this correction, is to see if there's any of these names that are starting to go out of those long accumulation bases, which I think are going to be broader. Like, I think the bases were like this, they broke a little bit, came in. I think now I've got to redefine those bases, but I'm looking for those stage 2 stocks that are going to be 6 to 24 month winners, going forward.
Brian, for those that are unfamiliar with Stan Weinstein's work, can you explain what a stage 2 is?
Yeah, so I'm actually using Brian Shannon's version of Stan's, but there's 4 stages of a stock's life cycle. There's it's accumulation stage, markup stage, which I think is stage 2, then distribution, which is stage 3, which is where you're kind of hitting the top and you can't get any higher, and then there's decline, which we saw like in 2022. So where you want to find your stocks is when they're coming out of stage 1, which is that accumulation stage, into the beginning of stage 2, which is markup. That markup phase can last a long time, and if it coincides with new highs, like what we're probably going to see here after we consolidate a little bit, they can be pretty powerful trends.
How are you approaching, adding exposure though right now? Like, are you kind of like last few days? Okay, we're due for a correction. We just talked about patience.
So I'm in North Texas, Steve. So I mean, I'm doing nothing, right? I'm on a laptop. I forgot my mouse. I'm trying to figure out what I'm going to do for 3 days out here. So I kind of at the end tend to taper off. I had a position options in Marvell last week, and I had, what else did I have? I had I did have a little Palantir. I got rid of those. The only thing I have right now is Kava, which is a long-term play. But the older I get and the more I do this, the more I tend to want to align effort and results.
Yeah.
And so I've really gotten in the last couple of years into scaling in more. And the reason it works so good for me, part of learning how to trade is learning yourself. I can't seem to focus that well on a stock unless I've got some skin in the game. And it doesn't have to be a lot of skin, right? It can be just a little bit, but something psychologically for me really laser focuses me on a stock. So if I'm interested in one, I'll try to get a little bit of a tester position. It's also good because so many times these days, right when a stock gets to a technical spot where it's going to break out, it gaps up, right? So it's nice to kind of be able to be in there ahead of time. Also, if it does go south and it hits your stop, you're not going to lose that much. So I'm really focused this year on trying to be a little more patient on getting into my stocks. Swing trade to me is the sweetest spot ever, right? It's the least amount of work for the biggest return. The market doesn't always give you that opportunity, but I think we're going to get that this year. And so that's going to be my philosophy going forward.
I like what Brian's talking about, sort of these personal mental hacks. We're all different. We have different time horizons. He's talking about how, he tries to keep his sanity by having some exposure. So if it runs away, at least you got some, but you don't need to just pile in immediately after, discovering your next great idea, right? So I really, really like that. Another common one is, if you're in something and you're not sure whether you should take some profits off, you might decline. If you take half off the table, you still have some as it goes higher. But if it drops from there, you took half off the table. So, again, I don't necessarily always do that. I actually rarely do that. But that's another hack that's similar to what Brian's talking about that I know a lot of smart people that incorporate, right?
I love the idea of scaling in and out. Especially in this kind of a market, right, where we're looking at these same patterns over and over and over again. Say something like Path, Brian. Like, I started looking at these things probably last quarter and saying, "Oh, you could just jump it, right? Because I expect this base to complete just like all the stock's peers, right? And then you can add more on the base breakout once you get the confirmation, or you can buy for the first time on the base breakout. Now look at something like Mara. You're going to get a big retest. You could probably add more and scale there. And psychologically, doesn't it help you hate yourself less when you scale in? Because it's not just all about this one decision and this one moment when you got in.
It's just easier from a lifestyle standpoint. I mean, trading skews to a young man's game, right? And we all have more responsibilities the older we get. JC was just talking about, he's got 3 kids. Like,
kids.
I want to be able to benefit from the market in a way that is most compatible with my lifestyle at whatever time I'm at. If you're 22 or 24 and you're going to, day trade like a maniac, go for it. Like, you got the time, the effort, the lack of responsibility. But you just got to find that spot that works perfect with your lifestyle. I mean, I was stupid yesterday. I was scalping some NASDAQ futures sitting at the airport. It's dumb, right? I still do that every now and then, but
You're too bored.
generally,
You're too
what's that?
bored. You're
No,
too
right.
bored.
But generally, I want to make my life a lot easier in every aspect, and the market's no exception.
Yeah, I like that. Words of wisdom.
What do you think is going to be the? Sorry, Spencer. The fun police is coming.
No. I wanted to
Brian.
bring up the meta chart that Brian had mentioned earlier.
Go ahead.
So we can kind of visualize that. I think we have it here. Just want to drive the point home. Yeah, this is what Brian was talking about.
Anybody that's honest and remembers those spaces with Steve and I, we were pounding the table. Not just buy Meta, but just like, don't get in this mindset of tech is dead, or don't get so biased one way. Keep your mind open. And after see that jump there, and it started basing right after that, it was just a train going higher.
I think JC got annoyed with me because I kept using the phrase generational buying opportunity for a lot of these with the big drawdown. Meta was down 75%. Now, today, a year later, we've grouped it into this, class of stocks that we call the Magnificent Seven. Just 2 years ago, everybody hated it. It wasn't going to be Meta anymore. It was over for Facebook.
Well, and they didn't just hate the stock. Remember, they hated Zuckerberg, right? Yep. And it's the same thing you see with Musk, right? I don't understand why people try to conflate their opinion with Musk with the price of Tesla. But he's so polarized. And again, this is just another trap that people fall into when they're trying to play the market.
Say what you want.
I love those kind of stocks where they hate the Zuck, or they hate the Musk, or they hate Peter Thiel, or right, like those sort of like built-in short squeezes. I really like that a lot. Brian, coming into the new year, I know you're very observant as to what's going on out there, frequent attender of a space or two. Where do you think the pain points are? Where do you think they're skewed too aggressively in one direction, and the pain trade could be a serious unwind?
Probably. I mean, I'm just guessing here. I would say tech. I think people probably got tech's gotten a little ahead of itself, and you're going to see it. Here's what will happen. But what could happen? You see a pullback and a little bit of a bounce, and then the bulls go, okay, great. Now I'm going to get back in, and then it goes down again, and that's where you're going to get the pain. But I think there's also again, not taking anything off the table. I know everybody thinks inflation is dead and buried like a corpse. I don't know. We could see a double spike in inflation. I mean, there's so many things that could happen. But I'm going to really try to be just neutral and beige paint, and just let price and my indicators take me in the right direction.
We had two really bright guys join us on the spaces yesterday. So Matt Warder was arguing for inflation, and Caleb was arguing for disinflation. And as somebody who tries to keep his distance from all of that, it was great. It was just a great discussion. And I think the bottom line is you can make a really good argument for both.
Does it surprise you that Matt Warder thinks inflation's coming?
Well, of course. I mean, he's a commodity bull. But yeah.
Well, I think the other pain trade is you're going to get a lot of people as we get closer to the election. They're going to try to position themselves based upon who they think is going to win and what they think that outcome will be, right? And that always is a loser. I can't remember who that guy was a couple years ago. The New York Times, he covered the market, and he dumped everything because Trump won, and missed out on 75% return over the next 4 years.
Dude, I lived in California when Trump won. Northern California, dude. These people were jumping out of buildings. We were buying everything. Remember how bullish the market was? I'm like, you guys are crazy.
If Trump gets reelected, expect things like coal stocks to probably stop working, solar energy and biotechs to start working, aerospace and defense to probably stop leading. Basically, all the opposite of what you would expect, because that's what we've seen with these last two presidencies.
Yeah.
Ask solar stocks how it's been having a Democrat in office.
Listen, keep an open mind, I think, is always prudent in any market environment. We've seen some crazy shit over the years, so nothing surprises me anymore. I'm so jaded, and sometimes I kind of sound like an asshole because I'm just like, I don't know, anything can happen, right? We saw crude oil trading below zero. I mean, we have seen some shit in our day. So it's hard to really surprise me, right? It's kind of like, yeah, sure, why not? So
I just you mentioned something earlier about the banking crisis. I forgot about it. Right, like I forgot that Luna blew up $60 billion of value. Right, like these things are so they just go by and you forget about them.
And by the way, it's a great point. Luna turned out to be a zero, but that was one of the greatest trades we ever put on from the long side. So people are like, "Oh, it's a Ponzi scheme." Okay, so what? Why is that my problem that it's a Ponzi scheme? Oh, it's manipulation. Great. Like
after it crashed, I had to change my Luna tattoo, the A to a D, so now it says Lund.
Hey now.
Thank you.
Now.
I'll be in North Texas all week. Thank you.
Tip your bartenders.
I misheard that. I thought you changed it to say Luda. I was like, what? Luda?
Luda.
Right. Dude, I love, what is it? Was it Soros? When he sees a bubble, he runs to go buy it? Hell yeah, man. These bubbles can last a long time. If it's a bubble, I'm buying it. I'm with Soros on that one.
It's also probably worth pointing out now that we're a year removed. Bitcoin bottomed, like, I don't know, a few weeks after the FTX thing.
Yeah.
So these events that cause everybody to run for the exits tend to coincide with turning points and big trend reversals.
It's the coal ETF. It's the coal ETF. And when they delist the marijuana, the pot ETF, I'll be buying with both
all
hands.
day. I'll be buying them with you. And guess what? Speaking of these ETF listings, we got a good one just here a few weeks ago. Thank you, Round Hill. They give us all the best information in terms of ETF listings and delistings. MAGS, MAGS. The Magnificent Seven is done outperforming now that you can buy a basket of them with an ETF. So
yeah. When did that launch though?
I think early November.
No, it launched in April.
No, it didn't.
No, it didn't.
And Kramer just came out yesterday and said Bitcoin's here to stay. So that probably means the top's in for crypto for now, right? That's a total.
Did he really?
He did, seriously, yeah.
Dude, Mags has been around since the spring. What are you guys talking about?
You got bad data, bro.
I don't think I do. I think I have good data. All my data sources take it back to April.
November 3rd.
Are you sure?
Spencer, Google this because I don't care enough, but I assume November because that's what TradingView has.
I was 99% sure it was the first week in November.
All right, how come I have all this old data then? Where's that coming from?
Well,
an old ticker.
You know what my answer is?
What?
Oh, what?
Excuse me. It began trading on April the 11th of 2023. Maybe if you would use the data sources that you pay for instead of the free website.
I got it. They changed the name and the ticker of the ETF. They changed the name, and so this used to be BIGT. It was the big tech ETF.
You get what you pay for, folks. Are you listening? You use the cheap shit that's free, and you're gonna get bad data.
So if
people ever want to see what it looks like behind the scenes at All Star Charts on a call, this is what.
More for the course. JC's right, Strazza's wrong.
It looks like they changed the holdings too, or the focus of the fund.
They changed the whole ETF to mimic the Magnificent Seven. It used to be just a big cap tech fund.
Yes, it did.
Yeah. Okay, so November.
So we're both right. How about that?
Yeah, I don't think so.
All right.
The chat's going crazy. They're putting their 2 cents in too.
In its magnificent form, it's existed since November.
And it hasn't been that magnificent at all.
Rachel, Strazza is young. Yeah, she's right.
All right, Brian, and thanks for coming on. As always, enjoy Dallas, and talk to you again soon.
Happy New Year.
Happy New Year.
Happy New Year to you. Bye-bye.
What is the statute of limitations on Happy New Year? First week of the year?
I'm going to keep going.
Epiphany.
5 days?
Epiphany.
Huh?
January the 6th.
So the first week. Okay.
January the 6th.
Did you just call that Epiphany?
Yeah.
What is that?
I don't call it that. That's what it's called.
What is it?
Some called it Three Kings Day.
Oh, okay. Yeah.
That's how my mom found out that there was no Santa Claus, because in Cuba, they don't have Santa Claus. They have the three kings that come bring presents on January the 6th. So when she moved to the United States when she was 7, she's like, who's this Santa Claus guy?
Got it. Okay. Well, there's our opening bell. And
why don't you give us a rundown?
Changed in the last 2 minutes.
All right, just a quick rundown. Dow futures down 120 points, about 30 basis points. S&P futures down 22 handles, about 50 bips. NASDAQ futures down 60 bips, down 100 points. Gold down 1.5%. Silver down 3%. Copper down 1.2%. Oil up 1.7%. Dollar up again with interest rates inching higher and the volatility index up towards 14. Checking in on the old funny money. Of course, you got BTC. It's still down 2,800 points, lows of the day, down to 42,000. It's a bloodbath out there in crypto markets. Even the Doge, Spencer's favorite, down 10% today. Matic down 15%. Mana down 12%. Gala down 14%. Look at all that. These things are getting smoked. Waves down 12%. Elron down 15%. These things are getting smoked. Look at Avalanche down 11%. Cosmos down 9%. Algorand down 12%.
Right.
Yeah. Okay.
Right.
Sushi Swap down. The best the best Brian Lund quote was when cryptos were really getting killed. He's like, "Wow, I can't believe something called Sushi Swap didn't turn out to be a winner."
Yeah. Unfortunately, you could say that about a lot of these.
No, I know. There's some silly names, but hey, right?
Look, I'm watching the banks today. Despite what was a rough mixtape yesterday, banks looked good. Giving that back here today, would like to see some follow through and to see these coils that have been in place since, I don't know, something like KRE since the middle of December. Like to see some resolutions here.
Steve, can I interest you in some analyst ratings on the banks today?
Yeah, please. Sure.
All right. We got Goldman downgrading, not a bank, but CME to sell.
Sure.
Also downgrading Aurora Innovation. I think that's also it's not a bank.
It's going to be down pretty good.
Downgrade to sell there as well. They're downgrading MGA, Magna International, to a neutral. Raymond James goes down to neutral. Schwab down to neutral. And Blackstone down to neutral. While they're at it,
they took Schwab down?
Yeah, but they upgraded
and you said
State Street to buy.
BlackRock or Blackstone?
Blackstone.
Huh.
Upgrading State Street to a buy. Upgrading, what is that? Ameriprise, AMP. That gets a buy as well. That's just that's just all one note. JP Morgan downgrading Prudential to neutral. LNC, Lincoln Financial, to underweight. What's EQH, Equitable, down to a neutral. There's more banks. Oh yeah, Keefe, Bruyette, and Woods, one of these smaller firms, downgrading.
They don't count.
Downgrading SoFi, downgrading Rocket.
Who?
SoFi and Rocket.
No, the firm.
Oh, you've heard of them. Keefe, Bruyette, and Woods. You haven't heard of them?
Oh.
All right. There's like 500 ratings today. It is insanity. There's so many.
It's almost like it's the beginning of the year and people are actually trying to justify their employment.
Almost like somebody was out for a week.
Yeah. Basically, there's 100.
It's like, look at me, boss. I'm doing work.
I could go on for 5 minutes. Just
please
I'm not going to. Don't worry. No, I'm not.
We talked about this likely being the case this week, last month. Some of these bases that broke out and really ran, Blackstone certainly comes to mind because you just named it. It's got, bearish catalyst, I guess, in terms of the analyst downgrade today. If we get some corrective action here, look to buy these things back at their base breakout levels, right? That former resistance has a good chance of turning into support and could make for a really good entry. So like Carlyle Group, a lot of these asset managers come to mind.
Oh, dude, you took it right out of you took the words right out of my mouth. Throw up slide 2.
I know that you said Blackstone, but look at something like BlackRock coming back to just a really clean level. Buy the ones that, maintain these valid reversal patterns. Yeah, good. The broker dealers.
Remember when I asked you, what would you add to this list?
Yeah. Yep, you're right. This one was one of them. Looked exactly the same. Totally.
Yep, for sure. So there you go. So we got the 5th. Are we going to call it something? Like, are we going to come up with like like a thing. You know how they do the TV people? They do a thing where they get a bunch of like ticker
Wait,
symbols and
can
they
you-
make like an
Can
acronym
you name
about
them
it.
again? Name them again.
Who?
It's the holy trinity of risk.
The holy trinity of risk. Ooh, I like that.
The other day.
The holy trinity would be
Who's in this
3.
group? Who's in this group?
It is 3.
No, it's 5.
Yeah, but I like the 3: homies, semis, broker dealers. You don't need the sectors. You're double counting too.
No, because semiconductors and tech are very. I thought about that. Way ahead of you. Technology is Microsoft and Apple. Mega cap tech. Semis or something else. Industrials, homies, semis,
Sem bill dealers.
No, I don't like that at all. I don't like the Trinity because the Trinity's 3.
Wait,
Here,
It's
throw
5.
this up.
The
it's
$5 footlongs of the market. Whatever happened to the $5 footlongs?
Inflation. Deflation got them.
Good. It's always inflation. It's always inflation's fault.
Dude.
Whether it be dis or
Hey, you're lucky if you get a $5 6-inch at Subway these days.
who goes to Subway? What do they even have Subways?
dude,
You
Subway
just
is
mentioned
just
$5
Sub-
footlong. What do you think that is?
Where do they have Subways? Do they have them in where you live, Spencer, in New Jersey?
yeah. I mean, I personally hate Subway, but
Well, because
yes,
you live
they
in New
have them.
Jersey, you have great sandwich shops. Great sandwich
Right.
shops.
I think I stopped eating Subway in college, but sure, they have them. They're everywhere. That's Subway's problem. Is they overexpanded. They had I think there was more Subways at one point in this country than any other restaurant.
Bridgeport, Connecticut, first one.
Is that true?
I
Hold on. Is that true?
Yeah.
Wow.
Yeah, they're from
Fun
Connecticut.
fact.
Pretty sure the guy went to UConn too. Pretty sure.
So he likes
Maybe not.
women's basketball.
That could be a stretch. UConn won by like 30 points last night.
Hey, Caitlin
Did they
Clark
play a
last
real
night.
team?
Buzzer beater. Incredible. Anyway,
Uh,
semis, homies, broker dealers.
Industrials, tech.
Holy Trinity.
It's not a Trinity. It's 5.
I count 3.
You went to a Catholic school. You're Italian. Like, your mother would be ashamed to hear you. Such blasphemy.
Wait, I'm sorry. I'm sorry. Who's the other two?
Oh my God, Spencer. Come on, try to keep up. Jesus Christ.
I'm trying to read the chat and listen to you guys at the same
Are
time.
you
It's not
ready?
always so
Are you
easy.
ready? Write it down. Industrials,
Yeah, I got that. One.
homies,
I got that one too.
tech,
Okay.
semis, BDs. Get with the interns. Come up with an acronym. Call me in the morning.
Isn't it a little bit redundant though?
We just discussed how it is not.
We're
Fine.
moving on.
Fine.
You don't pay attention, sir.
I am. I'm just trying to do too many things. Okay, sorry. Sometimes I'm reading. Sometimes I'm reading and trying to listen to you at the same time.
I think you're just trying to
Spencer,
ignore
what
it.
are the odds? What are the odds that you buy a pot stock before the end of 2024? Seriously. What are
Before
the
end of 20
chances?
I haven't bought a pot stock in like 3 or 4 years.
Right. So I'm implying that they start working. We start writing about them. You catch the FOMO and you start
I
riding. the
guess.
tow.
I mean, like JC said, anything can happen. It's not 0% chance, right?
All right.
Crazier things. I'll tell you what. I'm far more likely to buy a pot stock than I am to buy some random ass shitcoin, sushi swap, whatever the hell. Okay.
We
So-
talked about this. We asked you to work on this. Your hatred.
And
Your
I'm
hatred
saying
for all
Spencer, this aggression will not stand.
2
This
days
Aggression
later.
will not stand.
We just talked about
We're
this.
2 days into
Sushi
the
swap
year.
down.
You're already failing on your New Year's resolution, which is to be
made
not
no
a hater
progress.
on the shit coins
Yeah.
and the SPACs.
You
What-
want me to buy?
I just want you. I
After
just want you
two-
to be more accepting of others that are not like you.
What did the altcoins do to you?
Yeah, stop
What
being so racist.
Yeah.
How am I any different than Brian Lund? I agree with him wholeheartedly.
Now, don't you bring Brian
Yeah,
Lund
this
into
has
this?
nothing to do with
Got
Brian
nothing
Lund.
to do with Brian Lund.
Erroneous.
All right. Well, and Steve, to answer your question, it could happen.
think
Never
so.
say never. It could
I think
happen.
2024 could be
I
the
think
year.
I think he's gonna buy a shit coin and a SPAC.
Oh, if we get
I found a
buy a
pot stock that's
shitcoin?
working. I found one stock that is working.
hot
I didn't
stock,
buy it. A pot
What's
stock.
the one?
I want
What's the pot stock that makes the Pixes and the Axes that's working?
the zigzags?
Yeah, the zigzags. What's the ticker?
Turning Point Brands, TPB.
TPB. They
I
make
mean-
the rolling papers.
Full market for joint papers.
Is it though?
I don't know. The reversal is just about in. It's in. It's coming undone a little bit, but it was in.
Yeah, I don't know.
They don't excite me.
No.
I mean, come on.
There's better places to be.
Right,
We
anyway.
got asked about one of these cigarette companies, Philip Morris, on Chart Request Live yesterday. What, do you have an opinion on these? Philip Morris, Altria, they have some big yields right now. I just think, the same thing I would say about staples or your healthcare stocks. You really want your offense on the field, and this is the opposite of that, I'm afraid.
Are we talking about Philip Morris or are we talking about the Mo?
Both. Either one.
Philip Morris International looks better than the Mo.
Yeah.
How are the
Does.
yields? Are the yields the same?
No. So Philip Morris, they're going to pay you.
5.4.
This was like a split or something, right?
Wow.
A spin-off.
Philip Morris International pays a 5.5% yield. Altria, the Mo, pays a 9.5% yield. But that's probably because the stock got crushed. The stock got cut in half.
That's crazy, though. 9.5. That worries me. That you would have to do some homework there.
9.5. I don't think you're getting that, right?
That's too big. You're not getting that.
Do they make money?
Yeah. I mean, they better.
They're paying that much. They better.
They better.
That's true.
Yeah, they must. Dude, come on, they're selling cigarettes.
So what does that mean? I don't know anything about the cigarette business.
It's non-cyclical, right? These are vice goods. They have a very low price elasticity.
I'm telling you,
of
pot
demand.
stocks,
Why are we
bro.
talking about
Pot
staples?
stocks are staples.
Why are we
So-
talking about
so
staples all of a sudden?
Cigarettes are what you call, let's do economics. Cigarettes are what you call price inelastic. These are the products that every business wants to sell. What that simply means is you raise the price and demand doesn't change. People are going to buy it no matter what it costs. New York City figured this out. And we watched cigarettes go from $5 a pack to like 20 over a course of like 3 or 4 years in Manhattan. It's because of the price inelasticity.
I've never smoked
These guys-
cigarettes. Have you? Yeah, you have.
Yeah.
I've never smoked cigarettes.
No, they're not good for you.
You know, when I lived in New York City like 20-something years ago, when I first moved to New York City, actually, in 2003, they had
Mhm.
just stopped allowing people to smoke cigarettes inside,
That
right?
was a big deal. That was
Yeah.
a big
So
deal.
that people were smoking cigarettes outside. I hated cigarettes, but I would go out there and smoke cigarettes and I would talk to the girls. That was like my pickup line. Oh, you got an extra cigarette?
Yeah.
And then my friends
Yeah.
who actually did smoke cigarettes, they would grab it from me. They're like, give me that. You're not going to wait. Don't waste
Get out of
it.
here.
But by then, so that was my move. That was a pretty good move, huh?
Yeah. It is a good
Yeah.
move. I'm familiar with the move. I like it.
Hey,
that was my move.
healthcare has some pretty healthy representation on the 52-week highs list right now.
Hey, now.
Look at Merck. Look at Merck yesterday. JC was like, "Oh, are you telling me to look at a chart? It's been open for 30 minutes. Look at that candle.
I see
Can
it.
we look at it now? Woo!
I see it.
Hot.
I see it.
And then zoom out on the Merck. Zoom out, and you'll see a 20-year base that just completed, and then what we call a classic non-top. And now here we go. I like this one a lot. JC, I wouldn't buy healthcare stocks at the index level with your money, but Merck has my blessing. I like the Merck.
You wouldn't buy healthcare stocks at the index level with my money. Can you explain to me why?
He wouldn't buy XLV
You can't. I'm not buying XLV in this market.
because
We've been over this. We
discussed
don't have to
'cause
do this again.
It's too idiosyncratic.
You don't like making money?
It's defense.
So full of shit.
In my opinion, it is defense.
No. Well, your opinion is wrong, so you need to stop with those opinions. Yeah, you're embarrassing yourself, and we are all now dumber. Can you go to slide 2, Spencer? This is what Strazza is saying that he doesn't want to buy. That's the one you don't want to buy, Strazza?
Spencer, aren't you the one who usually looks at these charts and is like, well, where's it going to go? Up 10 points, 15 points? I'm buying stocks that I'm expecting to double as they climb up the right-hand side of a base. This just doesn't excite me. This doesn't get me out of bed in the morning. This is boring. Want to go buy UNH? Have at it.
I agree with you here. Normally, I actually am an index person, but
Merck is 5% of this bad boy.
I'll buy some biotechs. Let's go. I'll buy some med tech, buy some devices.
Madrigal.
I don't want the index. Don't want the index.
What about the Madrigal Pharmaceuticals?
I like the Madrigal Pharmaceuticals.
Consolidating up here. No?
Yeah, MDGL. MDGL looks good. I think, is this the Baker Bros one? I believe this is the Baker Bros. Yeah.
Want to do a quick little hot corner? GSAT.
Yeah.
Yeah, this guy keeps buying. Let's talk about it.
Another $1 million purchase in the GSAT.
Yeah, we'll keep it quick.
Hot corner. So hot right now.
And then, so what is this GSAT?
Mobile satellite. It's like Viasat and GoGo, but I don't know who their customers are. I've never been on a plane with Globalstar. Have you guys? Mobile satellite services? Maybe it's not planes.
Throw up slide 2. It's just a mess. But this guy keeps buying $1 million. It's not nothing.
Oh, you know what this is? This is
James Lynch.
Steve, this is for like long haul truckers.
So that they have satellite.
It looks like a lot of their customers are governments, local governments.
Okay.
Yeah.
Okay. 3.5 billion. Decent size. Doesn't pay a dividend, despite being classified as a telecom.
Because it's too little.
Go back to the table.
Too little.
Go back to the table. Yeah, fine. Back to the table.
Big 13G in the New York Times.
Yeah. Farallon Capital Partners, passive stake. This is a new ownership interest, 5.8%. And another biotech, Perceptive Advisors, with another passive stake, just north of 5%. Triggered the filing. That's Nuvalent Inc.
And
New York Times.
Yeah, look at that.
You buyer?
On a breakout? Sure, why not?
How does this chart look so good?
You want boring, Steve?
I mean, good. This thing hasn't done anything for 20 years. What's
you
so
want
good
boring?
about it?
I'll give you New York Times.
Look at this base. I mean, this is they're not in the best business, right?
It's not like the worst.
It's a pretty shitty business. Are you kidding me?
Newspaper
business?
It's certainly not great, but so January 2020 to right now, this thing has traded in a range from $7 to $58. We had like in everything bubble, and this thing couldn't even go from 30 to 60.
Can we talk about this biotech though?
Nuvalent.
How many biotechs are making new all-time highs that you could think of?
Yeah. What's this one doing different?
This is 4.7. Well, it's based out of Cambridge, so maybe it's the smart kids.
Well, that's where all the biotechs are.
Oh, are they? Okay.
Yeah.
I thought you said they were all in Jersey.
No, that's healthcare.
No.
That's pharma.
Cambridge.
Pharma's in New Jersey. Biotech's in Boston.
Particularly the genomics, all Boston.
Yeah.
We've been long this one. It's been on our radar. Look at that beautiful base breakout happened earlier this year. Already one target.
Looks like it does brain stuff.
Let's see.
This is way above my pay grade.
Clinical stage. Targeted therapies for patients with cancer. Okay.
$4.5 billion. It's not that little.
No.
But again, how many biotechnology stocks do you know that are doing this?
Came public at a time when, most of those IPOs are way underwater right now. Came public in August of 2021 when stocks were peaking, right? Market internals were peaking. But this one looks a lot different. Good looking chart. I like this.
All right, I got a good recess.
Trying to look for. I give up. All right,
we're ready for recess.
Wow,
we're ready.
That was fast. You were all right. Anyway, hey, I'm gonna drop the link for the hot corner right now in the chat, and during recess. So get the hot corner. It's free. Goes out every single day. The biggest trades from insiders, from members of Congress, from corporate executives, hedge funds, the smart money, so they say. And we compile it in a nice
big money
table.
The big money.
Right, the big money.
All right, so a couple weeks ago, right, I'm at my mother-in-law's house, and her freezer is not closing because she's got too much shit in it, right? I'm like, Gina, like your freezer's not closing. We got to take some of this stuff out. So I start digging in there, and I find a 10-pound ribeye roast. 10-pound ribeye roast costs like $200. So this is not like just some random piece of meat. Like this is, you know, top-notch piece of meat. And I look at the packaging. It says, you know, it has like a born on date, and it was packaged in December of 2021. So it had been in the freezer for 2 years. I'm like,
I don't know, man.
I'm like, wow, what do we do? So me and her, she's like, there's no way I'm eating that. I was like, I probably will. So I'm like, let me ask Twitter, right? This is what Twitter's great for. So I asked Twitter, I'm like, Twitter, here's the sitch. What should I do? Dude, the comment section on that tweet, hundreds and hundreds of tweets later, consensus was man up, cook it and eat it.
You have to cook it just to see, right? Like,
What are you gonna throw it away?
right.
So
Would it taste funny if you shouldn't eat it? Like, would you be able to know? I don't think so.
let me tell you something.
Right?
I
You know
defrosted
what I'm
it.
saying?
It had been there for 2 years. It was wrapped in just like paper, like butcher paper, and then it was
Yeah.
in a Ziploc bag, like a big Ziploc bag. Okay,
I understand.
in the freezer for 2 years. Pulled it out, let it defrost slowly in the refrigerator for a few days. No problem. Yesterday, threw it in took it out of the fridge in the morning, let it sit on the counter for 3 hours or so, 4 hours. Really came down to room temperature. Set the oven at 500. Put it in there for 15 minutes to really let it just really sear that bastard. And it was covered in butter, just covered in butter, herbs, rosemary, sage, and thyme, and salt, pepper, garlic powder, onion powder. 500 for 15 minutes, and then dropped it down to 300 and just let it sit for a couple more hours. Let me tell you something. This thing was delicious. People were like, oh, it's more dry aged. It's going to give you more funky. I don't know about all that, but it was fucking awesome. So thank you, Twitter, for the advice. I'm glad I cooked it. I have so much leftovers because nobody in my family will dare to eat it. So I have 10 pounds of ribeye roast for myself. I put down maybe 10, 15 ounces yesterday, if I had to guess. So I got a long way to
Morgan
go.
won't eat it. Morgan won't eat it.
Nobody in my family will eat it. If she says if I give any to the kids, she'll kill me. Nobody wants to touch it. It was amazing. It was amazing. Still is.
Is it the same? Is that prime rib? Is that what prime rib is, or no?
Yes. It's a ribeye roast. Like you could do like all kinds of like, you know, round eye roast, and there's definitely cheaper cuts that you could do it with. But if you get a ribeye roast, I mean, that is as high quality as it gets. It's not cheap. So you got to make it if you find it, even if it's been there for 2 years. So lesson learned, if you find 2-year-old meat, cook that shit.
There's also something, you know, how you said that it was in the paper. There's something about storing stuff in the freezer with the paper, because they do it here with the fish. You go out and you catch a bunch of fish. People, they wrap it in paper first, then they put it in the bag. It does something.
Yeah, no, I think you're right. There's something about the paper. You're right. A lot of people in the chat were just like, JC, you know, did you have a tough year in the market? Throw it away and get a new one, you know? And it's like, you know, I had a good year, right? Hard not to, right? It wasn't my intelligence. It was more the environment. I think you cook it regardless of whether you had a good year or bad year. It's a $200 piece of meat. Like, just cook the damn thing.
I understand. Everybody in the chat though is like, oh, it's frozen. It's fine. You can't just freeze something like forever and then expect it to be fine.
It was after 2 years. Whew, it was incredible. Let me tell you, incredible.
What's the max there? Like, what would you, if it was 3 or 4 years, what would have made you be like,
you cook it because you have to see. You have to at least see.
Yeah. I smelled it. It didn't smell funky. It looked like a normal, like ribeye. It looked perfectly normal. Like if I just got, I swear to God.
I think PK got it. It's the paper is to keep it from getting freezer burn.
Oh, that's interesting, because a lot of people were like, if there's any freezer burn, cut off the freezer burn. There wasn't any. It literally looked like I just got it from the butcher.
Yeah. Okay. Interesting. All right. I got nothing.
I thought that was a pretty good recess, right?
That was a great
Very good
recess.
Good lesson. Good lesson. Just cook the damn meat.
My only recess is shout out to me, pat on the back for me for finally winning a certain fantasy football league that I've been in for 10 years.
Hey.
I got it. Get her done.
So what do you get?
the season's not over.
$600 in a trophy.
All right. That's 3 ribeye roasts right there.
There you go.
Too much time.
Too much time.
Too much time.
Yeah.
Spencer doesn't have any kids yet, so he doesn't. He's got plenty of time.
That's true. That is true.
JC has kids.
I have kids. I don't have time for that shit.
You have kids, right?
Yeah, I get one football game on Sundays. Sometimes I get a football game on Saturdays, and that's the extent of my watching. I'm okay with that. It's all good. There's a time and a place, right? Time and a place.
No Mary on the show today. She was traveling to the Rose Bowl. I'm sure we'll hear all about it when she's on the show next week. We do have
won.
What?
Good for her. They won. Michigan won.
They did
Good
win.
for her.
It was very surprising.
Yeah.
Good for her.
So we'll have our weekly internal meeting at 11 o'clock that's available to members of the Portfolio Accelerator program. We're going to record a What the Fic today, and then Steve will be on Hot Corner at 1 o'clock Eastern Time right here on the channel. That's all I got. Thanks to Brian Lund. Thanks to all of you. I see we're up to, I have to refresh the page. I think the like number is pretty low. Let's see. We had like 500 people tune in today. Let's see if we can get to like 100 likes in the next 30 seconds. I'd appreciate that. Hey, you know what I don't do enough of on this show is just saying, please remember that all the information on this show is meant to be used as informational purposes, not for investing or trading advice. We should get a disclaimer for the end of the show. We should probably work on that.
And, my attorneys say we're good.
What?
My attorneys say we're good. I asked them.
All right.
Yeah, we're good.
On tomorrow's
YOLO
show,
responsibly. Or don't. I don't care.
Yeah. Tomorrow's show, I should start announcing the next day's guest today. Tomorrow's show, Chris Verone. Yeah. It's a Strategics Week here at Stock Market TV. So
Strategics Week.
That's it.
Yeah.
Is Verone just super jealous that Sohn keeps coming in and Verone doesn't get the invite? He's a little jealous, little inter-office competition there. I see it. I see it. I like it. All right. By the way, Chris Verone, huge inspiration to me earlier in my career as well. Very quick story. He's giving a presentation and I'm super bearish. I don't remember what year this is. It was a long time ago, 10, 15 years ago. And I'm super bearish. And he's talking about healthcare. Funny. He's talking about healthcare breaking out and da-da-da-da-da. And he's like all optimistic. And I'm like, but what about China? Because China looked like shit at the time. And he's like, you don't like China? Don't buy China. What does that have to do with healthcare stocks? And that has just always stuck with me. And it's true. He was right. And China kept sucking and healthcare stocks did great. So shout out to Chris Verone. Can't wait to remind him of that story tomorrow.
All right. We'll see you guys there. Smash the like. Go make some money.
Adios.
Thanks. Bye.
I can't take no loss. I don't even know what it costs.